Hey there, everybody, and welcome. This is Scott Bauer, and I am here to bring you today's market update. And I want to show you how we adjust a position and how we manage our risk here to maximize reward to risk. All right, so here's what I have up on the screen right now. You can see a graph here of a stock that we put a position on just a couple weeks ago called ZS, Zscaler. Okay, and if you look right here, guys, okay, you can see that over the last 4 6 weeks, what we have been seeing is higher highs and higher lows. Okay, very bullish trend, very bullish trend. This red line that you see here is the 50-day moving average. Also very significant because there's been some major support in that 50-day moving average over the last 3 or 4 months. So what was our trigger here a couple weeks ago? Like I said, well, after the stock traded up here, okay, to that, made that new high, came back down. You can see right here, we came back down here, almost touched that 50-day moving average support, started going back up. That's where we got in. Okay, now, what was the right spread to do? What was the right type of trade? I am the most risk averse person in the world, but I always maximize my reward to risk. So I actually did a very bullish call calendar spread. You know why I did that? I did that because not only did it give me the opportunity to take advantage of a move up, but this next chart I'm going to show you, it gave me the opportunity to buy extremely inexpensive implied volatility, inexpensive option premium. Here is my volatility chart, implied volatility in Zscaler here, and you can see where we bought this thing was right here. Okay, the lower the volatility, the cheaper options are. The higher the volatility, the more expensive they are. So I was able to take advantage of not only getting in at a price where we were looking for the stock to move up, but also at a price where premium volatility was cheap. And that made that so attractive to me. That is the reason I chose to do a call calendar spread. Okay, so what happened here? Well, check this out. This is the actual list of trades for me here. And if we look on here, you can see that back on 6/27, we bought the July 5th, July 19th call calendar spread, 82 strike calls. We paid 95 cents. Okay, when you have a calendar spread, you always want the stock to go to your short strike. Well, what happened? Last week, right before July 4th, we saw the stock creeping up to about 81, made a great move. So what did I decide to do? Well, because premium had actually gone up a little bit, I decided to roll out our position, the best risk adjustment we could make. So I covered our short July 5th call and sold, as you can see here, the July 19th 85 call. You can see that right here. Here's that transaction right here. And you know what? I collected 85 cents for that, meaning between what I paid for my original call spread, less the credit I received, I now wound up with an incredible July 82, 85 bull call spread. $3 wide call spread in ZS for 10 cents. Okay, that is maximizing reward to risk. Now, because, like I said earlier, I am a risk-averse trader. Bulls and bears prosper. Pigs go to the slaughter. I've learned every trick you can imagine since 1992 trading on the floor of the CBOE. Stock rallied a little further, and as you can see, just today, we exited half of our position. Remember that we had paid 10 cents for $1.50. $1.50. Paid 10 cents, out for $1.50. Not so bad. Now, what do we do with the rest? Remember, bulls and bears prosper. Pigs go to the slaughter. I want to make sure I am locking in my profits. But I also want to get more profits if the stock continues to be in a bullish trend. So as you can see, I placed this stop order. So I'm locking in at a worst case scenario. I have a stop order in at $1.20 for something that I paid 10 cents for. If the stock continues to go up and our spread continues to go up, we'll adjust that stop and we'll collect more and more. This, folks, is the power of not only trading on direction, but trading on volatility, knowing when to buy and sell volatility. So as wrapping this up here, you can see we're getting back up to the tip top here, all-time highs in ZS. That may be a place that we are going to stop ourselves out or take off the rest of our spread. Bottom line, I am locked in, big winner, love this type of trade. When you follow the rules, okay, and you're able to combine direction with volatility, that is the power of options. So thank you so much for watching today's market update. And to learn more, join me next Wednesday for a free workshop. I'm being hosted by the fine people over at Trade Thirsty, and I'm going to share with you how I use volatility to make money in options with a simple step-by-step process that I've literally been using since 1992. So click on the link below to join me. And again, thank you so much, everybody. Thanks for watching.